Hello everybody, welcome to Monday Morning Must-Knows. My name is Merlin Rothfeld, and here are several things to pay attention to for the upcoming trading week. Now, of course, last week kind of light with the earnings. We had two major central bank announcements with the Reserve Bank of Australia and the Bank of England, both keeping things right where they're at. So no real major surprises. I think the lack of surprising news and economic data was actually positive for the equity markets. We saw the S&P, NASDAQ, and Russell all traversing slightly up for the week, which was good. With crypto not doing so well. So let's dive into our upcoming trading week and see what we've got cooking. Of course, as usual, we'll start things off with our earnings calendar. It's a lot less than we've seen over the past couple of weeks, but there still are some big names in here. We start things off on Monday with only one. That's Tencent Music. We're reporting earnings there. On Tuesday, Home Depot, Alibaba, and Sony. Wednesday, we shift to Tencent again, but this is the major holding company, the bigger version of it. You also have Cisco and TJ Maxx. That one's important because we have retail sales numbers coming out this week as well. We'll get to that in just a second. Now, continuing on, this is probably the biggest day of the week with regards to companies' earnings. You can see we've got Walmart, Applied Materials, JD, Ross Stores, and Baidu. And that is pretty much it. Nothing else to speak of there with the earnings. So 405 companies reporting this week. Really, Walmart, one of the major ones that most people will be focusing on. And again, you do have Ross Stores, TJ Maxx, which ties in nicely with our retail sales. So let's move from there to another very important topic, which of course we will probably talk about every time we do this until it finally changes and becomes a non-topic. It's important that you know not only the impacts of inflation on our markets, but also when exactly those numbers are coming out, so you're not caught off guard with some crazy market move, which could happen at any time. So we start things off in reverse order this week. Typically, what you get is a CPI number released, and then 2 days later, you get the PPI. For some reason, they said, let's just mess with the investors this week and switch it up. We start things off on Tuesday at 8:30 a.m. Eastern Time with the PPI number. That's Producer Price Index, which will give us a clue as to maybe what the consumers are paying. You can see right now the previous reading there was 0.2. So what are we expecting for the upcoming announcement on Tuesday? Well, bring in a red line. They're thinking actually seeing an increase in the Producer Price Index, meaning the cost of goods and services for manufacturers is increasing ever so slightly. Now, it's not that big of an increase going from 0.2 to 0.3, but it does reflect an increase, which may mean higher inflation going forward. So for those of you who are thinking we're going to get a bunch of rate cuts this year, the higher that inflation number goes, the less likely you're going to see rate cuts. But we'll have to see later on in the next couple weeks on how this all pans out. Moving on to the next announcement, which actually happens the next day on Wednesday, you have the Consumer Price Index numbers at 8:30 a.m. Eastern Time. And as you can see here, it has been getting ever higher over the past 5 months, creeping more and more and more to the upside. So what are we expecting here with CPI? You would expect it to be higher simply because the Producer Price Index expectations are higher. Therefore, that should pass on to consumers. And lo and behold, drum roll please, they're expecting to stay right where it's at 0.4. So all in all, this is not really a bad sign. I think Consumer Price Index is the most important one because that's where the people are spending. That's the consumption side of it. The production side is the Producer Price Index. And of course, ultimately, if we see that tick higher and higher and higher, that should pass on to the consumers down the road. So two very important pieces here. If we see that Consumer Price Index deviate anywhere from 0.4%, you're going to have a wild swing in the market on Wednesday. And of course, the PPI being earlier this time could give us some clues as to what that's going to be. So an interesting couple of days here on Tuesday and Wednesday. Now, let's shift and go over to the man, the myth, the legend. I'm talking about Jerome Powell. He is the one who is the most powerful in the world. And he has a speaking engagement. This one's going to be in the Netherlands. So not the most influential in the world, but it is during regular market hours. It's for the Netherlands Foreign Bankers Association. That will be Tuesday at 10 a.m. Eastern Time. So 30 minutes in the trading day. Now, again, I don't think this will be anywhere as impactful as, let's say, an FOMC meeting and the press conference afterwards. But we find that when he speaks, markets tend to have jitters. They go quiet before that announcement, and as he's speaking, you get all sorts of volatility. So if you're trading on Tuesday, right around 10 a.m. Eastern Time, and you're going, what's going on with these markets? They're popping all over the place, up, down, who knows? It's probably because of Jerome Powell speaking. So from a defensive standpoint, probably best just to back off a little bit, or at least know that there is going to be most likely some volatile swings right around that time. And for our last piece of information, we shift back to retail sales. As I mentioned, we had TJ Maxx, Ross Stores, Walmart reporting this week, and retail sales numbers will be coming out on Wednesday at 8:30 a.m. Eastern Time. Now, this is, of course, a major driver of economic growth. We want to see consumption, ideally retail sales, moving higher, reflecting optimism by Americans consuming and buying goods and services. Well, if you're like me and you think that there might be some problems ahead, you're going to be spending less and less and less. What's the expectation, you ask? Well, let's bring in our little red line across the side. Ooh, goodness. Last one was 0.7%. You can see that little red line I just drew across. The expectations were 0.4% last time. We came out at 0.7, which is good. Now they're expecting, again, a lower retail sales number. Now, I'm a skeptic. I'm one of these people that thinks all this data is corrupt. I think it's all manipulated and designed to influence us. So last time they expected 0.4%, came out at 0.7. Yay, we're doing so good. Market had a nice little move up. This may be the same thing. Essentially what you're doing is saying, okay, we've got a 100-meter hurdle race. And normally the hurdles, let's say, are 3 feet tall. We're going to make those hurdles 1 foot tall today. So you're going to get record-setting hurdle runs in that because the hurdles are so low. In this case, the expectation has been lowered significantly from the previous number, from 0.7 down to 0.4. Well, any surprise above that could juice the markets. And again, that's going to happen Wednesday at 8:30 a.m. Eastern Time. That's 1 hour before the markets open. So quite a few things. We've got some nice retail stock earnings going on. You have an FOMC meeting. You have 2 major pieces of inflation and retail sales coming up for the upcoming trading week. Could prove to be an eventful one. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.